Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Bukit Jalil Global Acquisition 1 Limited. And trust me, after reading this, you might need to acquire something yourself, like maybe a strong cup of coffee. This is a report called an 8K, which companies file to let investors know about important events. In this case, it's about extending the deadline for a business deal and some related financial moves. Basically, this company, Bukit Jalil, is trying to merge with another company called Global IBO Group, or GIBO. They needed more time to get the deal done, and that's what this report is about. They're asking their shareholders for a little more patience and a little more money. If you are a shareholder and have questions, the company has a proxy solicitor you can reach out to. A proxy solicitor is basically someone who helps them get shareholder votes. So why the need for more time? Bukit Jalil originally had until June of last year to complete a business combination, but they had a clause in their agreement that allowed them to extend that deadline month by month until June of this year. Each month they can extend it, but it comes at a cost. This payment goes into a trust account for the company's public shareholders. They need to deposit this money each month. On or around March 26, the company paid $100,000 into the trust account. This payment allows them to extend the deadline one more month until the end of April. This is actually the 10th time they've used this extension option, so they are running it pretty close to their max. To cover this $100,000 extension payment, the company basically took out a loan from its sponsor, called Bukit Jalil Global Investment. They issued what's called an unsecured promissory note. Think of it like an IOU. The interesting thing about this note is how it gets paid back. It's due either when the company finally completes its business combination or when the whole thing falls apart. The loan doesn't charge any interest, but there are some default situations. If the company doesn't pay back the principal within 5 days of the deadline, or if they go bankrupt or break any promises of the loan, then the sponsor can go after them for the money. The sponsor even has the option to convert this loan into units of the company before they merge. The sponsor can say, instead of paying me back, give me stocks. Each unit would include one ordinary share, half of a warrant, and a right to receive a tenth of another share after the deal closes. So what does all of this mean? Well, it shows that Bukit Jalil is really trying to get this deal with GIBO done. They are willing to keep paying to extend the deadline, which suggests they see some value in the merger. It also shows that the sponsor is willing to keep putting money in, which is another sign of confidence. But the loan terms are something to keep an eye on. The fact that the sponsor can convert the debt into equity means they could end up owning a larger piece of the combined company. The company even stated that they may not be transferable to the sponsor until a business combination happens. If you want to read the specific details of the loan for yourself, you can check out Exhibit 10 point attached to this report. It's a copy of the promissory note. Now, what's my take on all of this? Bukit Jalil is in a bit of a tight spot. They've used most of their extensions and they are relying on the sponsor to keep funding them. It's also unclear why the extension is needed. Are they still working out the terms of the deal with GIBO? Are there regulatory hurdles? The lack of transparency here isn't ideal. On the other hand, the fact that the sponsor is willing to keep investing suggests there might be something promising about the GIBO merger. But investors should be cautious. These kinds of situations are risky. If the deal falls through, Bukit Jalil could be in trouble. Overall, I'd say Bukit Jalil is walking a tightrope. They need to get this deal done soon, and they need to be more transparent with investors about the challenges they're facing. If they can pull it off, the merger could be a good thing. But there are definitely some red flags here that investors should be aware of. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more corporate decoder videos. Let me know in the comments if there is any reports or companies you want me to check out.